In our previous video titled Why Private Equity, we talked about motivations on why public companies are becoming private, why private companies are staying private longer, and why investors are increasing their allocations to the private markets. These motivations included quarterly reporting and the volatility in the public markets. In this video, we will look at the investor perspective when looking at the differences between investing in a public company, a company trading on the stock market, and investing in a private company. First, we'll talk about the differences when finding companies, and then we'll talk about the differences when buying companies, and then we'll talk about the differences when creating value and selling companies. And we'll end this video with a final thought. So let's get started with finding companies. To find a public company to buy, it's not so hard. They're all trading on the biggest stock exchanges in the world, such as the New York Stock Exchange. Since there are so many companies that are public, you may want to narrow down your search using a stock screener. You can screen by industry, such as tech, or even by multiples, such as price to earnings. Finding public companies is definitely not a challenge. To find a private company to buy, well, that's pretty difficult. Most private companies are not for sale. As an investor, you need to have a strategy to obtain proprietary deal flow, which could be done through many methods, including building relationships, as we talked about in our video titled How to Build Relationships in Private Equity. Almost every private equity firm claims to have proprietary deal flow, but in reality, it's very difficult to obtain. Now let's move on to buying companies. It's never been easier to buy public companies. I remember when I was a kid following the stock market, investors used to have to call their stockbrokers whenever they wanted to buy or sell stocks. Today, most of my students can create trading accounts and buy public companies with the click of a button. And the cost, well, usually the trade is less than $10, and with some providers, it's even free. On top of that, because of the disclosure requirements for public companies, you get to look at the company's quarterly and annual reports, listen to the company's conference calls, look at the company's investor presentations, and more. To buy a private company, well, it's not so easy. After finding a company to buy, you can't just buy it. If you can convince the owner to sell it to you, you need to negotiate a price. And for a public company, you already have a stock price. Well, the stock price is based on the last price traded, and you have to buy the stock based on the bid and ask spread. But the point I'm trying to make is that coming up with the price of a private company is a lot harder than coming up with a price for a public company. On top of that, for a private company, you need to ask the right questions to get the information you need. There is definitely not the same disclosure requirements as there are for public companies. And once you are ready to buy, it's a lot harder than just clicking a button. You need to write a purchase and sale agreement or a different type of complex legal agreement depending on the structure. Buying private companies is not easy. Now let's move on to creating value and selling companies. In public companies, the hard part is identifying whether management will execute on the value creation strategies that they're proposing. Well, and also to figure out if these are the right strategies for the firm in the first place. And then when you eventually want to sell the company, well, it's as easy as it was when you bought the company. Just have to click the button. In private companies, well, you may be the one responsible for creating value in the companies through operational improvements, multiple expansion, or through deal structuring, all of which we talked about in our video titled Value Creation in Private Equity. Then, when it's time to sell the company, well, you need to find a buyer, negotiate a deal, and write up a bunch of complex agreements, similar to when you bought the company in the first place. Buying private companies is definitely an illiquid investment. It's not so easy to sell your stake. Although you can sell it on the secondary market, as we talked about in our video titled Private Equity Secondaries. Now, here's a final thought. Investors, the process of direct investing in private companies includes a plan on how to find, buy, create value in, and sell private companies. This plan needs to be detailed, and you need to have the right expertise to do so. Too many investors blindly invest alongside other investors in private companies without fully understanding the process. In my opinion, if you're going to buy private companies, you need to fully understand the process on how to find, buy, create value in, and sell private companies. If you're serious about buying private companies and need help with this, please get on the wait list for our next virtual live full-day private equity bootcamp, where we'll go into detail on how to create a plan to find, buy, create value in, and sell private companies. In this video, we looked at the investor perspective when looking at the differences between investing in a public company, a company trading on the stock market, and investing in a private company. First, we talked about the differences when finding companies. Then, we talked about the differences when buying companies. And then we talked about the differences when creating value and selling companies. If you can think of any other differences between buying public companies and buying private companies, please leave them in the comments below. Thanks for watching our video. If you enjoyed it, please click the like and subscribe buttons. And in the description below, you'll find links to our unique private equity newsletter that provides exclusive commentary on recent private equity deals, as well as our website and our LinkedIn page, where you can find more information on many private equity topics. Thanks, and we'll see you in our next video.